Welcome to this episode of Abstraction, a podcast that with the help of Australia and New Zealand's leading entrepreneurs, investors and experts, breaks down the complexity of emerging tech trends. My name is Hunter Watkin. I'm a tech startup investor at Rampersand, an early stage venture capital firm, and I'm on a mission to learn out in the open with those curious to understand what's currently possible when it comes to emerging technologies and bring to light how people and companies are overcoming the obstacles that lie ahead. This season is all about carbon-related technology. I'll speak to guests using tech, engineering and science to drive carbon removal and reduction projects, as well as the investors and leaders mobilising change in what many of my guests are calling the decisive decade. You can catch every episode by subscribing on Spotify, YouTube and Apple Podcasts, or following me, Hunter Watkin, on LinkedIn and Twitter, so you don't miss a beat. Before diving into this episode, please be aware that nothing expressed throughout constitutes financial or investment advice. We hope you enjoy. Welcome to another episode of Abstraction, slightly different format this week. I have my colleague Abhi joining me to flip the table and interrogate some of what I've learnt in doing this podcast and interviewing industry founders and investors so that we can help listeners understand how it is that we as investors think about and ask questions about this kind of technology, and just do a retro on what's been learnt to date and what we're looking forward to in the future. Abhi, for listeners that might not have come across you, could you please, for our audience, introduce yourself and a little bit about your background today?
Sure. Thanks for having me on the pod again. Second appearance. I feel very, very privileged to be here. And very keen to sort of flip the script a little and ask you a bunch of questions. For those who don't know me, I work at Rampersand alongside Hunter as an investment associate. I've been in VC for 2 years now. Previously worked for another fund called Folklore Ventures as an investor there as well, and have worked in an early stage fintech and also investment consulting in the past. I must admit, climate and carbon tech in particular are new topics to me, so I definitely learned a ton. I think my favorite episode for this series was probably with James from Orchestra. Learned a lot on that episode, so yeah, keen to dive in and learn more about what you've learned doing the podcast.
Yeah, awesome. I guess, Abhi, just so our listeners have a little bit of background on how we think about looking at new areas of investment, perhaps you could just quickly talk listeners through how we go about building an investment thesis, and then we can dive into carbon tech more specifically.
Yeah, I think when you're sort of thinking about investment thesis building and how you actually go about gaining conviction about a certain market or a certain thematic, you can sort of approach it in two different ways, but I like to approach it from a top-down perspective. And it's sort of understanding what the market or the thematic looks like today, understanding the quantum of tailwinds that might be pushing the market forward, but also understanding what the headwinds sort of look like and what's actually holding innovation back in this market. And I think that's the most important part about all of this, is actually understanding the significance of the headwinds that actually exist. And I think in the past, climate tech has been fraught with a lot of headwinds, maybe unfairly so, given where we're headed with climate change and whatnot. But I think understanding where innovation can stumble and where entrepreneurs and innovators will face difficulty is super, super important to understand. And in saying that, I think you've got to balance the two. You've got to think about how an individual or an individual founder and their company can sort of push through the headwinds and the barriers to pushing innovation and improving the world realistically. When thinking about thematics, top-down approach sort of makes sense to me. And then understanding the profiles of people that can drive innovation. I think we'd all love to say that anyone can drive innovation in any industry, but realistically, as VCs, we're sort of looking for people with unique insight, unique backgrounds, and experiences. And it's understanding how that unique insight is cultivated, first and foremost, how they communicate it, and how they actually execute on that is the next sort of part of understanding or unpacking a thematic. It's thinking about the potential ways someone can actually execute on their insight and what successful strategies look like in the past and how the current crop of founders sort of take that on board and innovate on top of that. I think that's what you're sort of always looking for. We've sort of seen in the past a lot of marketplaces or a lot of SaaS businesses, but moving forward, especially with new technology such as blockchain or AI, business model innovation is going to be a real thing. And it's sort of understanding the incentives for why someone might interact with a product or might purchase a product or whatever it may be, sort of unpicking the incentives.
Yeah, awesome. And I think when you talk about headwinds, tailwinds, working out where the true value capture will accrue, that has been the core purpose of learning out in the open on carbon and carbon markets. This area of technology attracts a lot of skepticism, and I think rightly so. I think there can be people propositioning things that are very hard to validate around whether they actually do good for the world, whether they actually deliver commercial value and returns to customers. And so really wanted to cut through the hype, which is really core to our job as venture capitalists, and pick apart where really strong, high impact, but high value solutions were being built. And my way of doing that has been to interview founders that have made progress, that have achieved technical go-to-market milestones and proven that there is a market for what they're doing. And so the way in which I've gone about building a series on carbon markets is I've picked one core problem, which is excess carbon in the atmosphere, and looked at both sides of the marketplace for solving that, which is the reduction or removal of carbon or the purchasing and buying of offsets on the other side to finance that kind of activity, and really worked out where the problems lie. Is it a supply side thing? Is it a lack of carbon projects generally? Or is it a buy side thing around a lack of reliability, a lack of demand? Where are the actual problems? And so if we run through who came on the series so far, it was a mix of investors and founders. Amongst the founding set, I think in reflection, what all of them were doing is a solution that reduces or prevents the emission of greater carbon in the atmosphere for a given commercial purpose. So as Abhi mentioned, interviewed James from Orchestra recently, they are building software that makes it a lot easier to understand the commercial value of solar and battery projects in a commercial setting, and then to roll those out, monitor and manage them. That currently has a lot of barriers to entry and is part of why, even though it commercially makes sense to do it, a lot of businesses haven't been able to turn their mind to it and make the investment. I interviewed a really treasured portfolio founder of ours, Olympia from GoTerra. They process organic waste and turn it into 3 revenue streams from the offtakes. And the way they do that is robots that work with maggots to consume and then poo this waste out, the offtakes being their poo and their carcasses, which is pretty amazing. The commercial problem they solve is reducing the cost of not only processing waste, but emissions in transporting waste around the place and to landfill. Other guests included Anastasia from Regrow, which is mitigating commercial risk in agricultural businesses, Katherine from Bright, which is making the financing of solar and battery more affordable for consumers, and then Alex Logan was the other founder, who is doing the verification of and measurement of carbon projects, primarily nature-based projects. The reason that's important is currently the cost of generating a carbon credit is really, really high because you need the right verifications, the right people and intermediaries to measure and make sure that what is being turned into a carbon credit has efficacy and can be relied on by buyers.
It's a pretty stellar lineup. But I think one thing that sort of stood out, even just when you were talking now, was thinking around whether people actually care about this sort of stuff. And corporations definitely think people care because there's always allegations of greenwashing. But how do you sort of go from a culture of greenwashing to building things that people can see the tangible impact in? You're actually solving first order problems for customers, both consumers and for businesses. I think this is like especially important in the current market when problems are being scrutinized more by VCs. People are concerned about what they're actually spending their money on. and want to see a tangible impact out of their money spent. And I think people definitely care about having a positive impact on the world or mitigating some of the negative activities. But how do you actually think about having some level of commercial return from all the things that get funded?
One of the things Paul, our colleague, said to me early days when I was digging into this is there is a huge mismatch between what people say and what they will pay for. And bringing those things together is actually done very rarely. And you allude to the right thing. And I think this has been core to how I've been able to build conviction around where opportunities lie. And that is that a business, its number one job is to maximize shareholder return. And that's not mean and nasty. You can still have impact embedded into your business, but you will not survive and you will not be a generational company that has a profound impact on people's lives unless it makes commercial sense. So it's really important that what you're selling delivers a clear return on investment for a customer. To your question around sort of first order problems, if we apply this to some of the guests that have come on the podcast, GoTerra, for instance, one that I know really well, they are solving a commercial problem in the sense that it costs an increasing amount to dispose of all kinds of waste. Now, that is a combination of how much it costs when you deliver it to landfill to dispose of it, how much it costs to transport it, and those prices are increasing. There's a decreasing amount of landfill relative to how much waste is getting produced. So landfill sites, sorry. The cost of transport is increasing. And so a business that allows you to process your waste on site in a way that produces less emissions and in a cheaper way makes commercial sense. I think going more macro, when we think about net zero targets that corporates in particular might make, there are policy tailwinds, but they're longer term. So VCs, while they are happy to believe on sort of a net zero future in 5-10 years time, they do want that more immediate, as you say, tailwind. A corporate that's locked themselves into something, committed themselves, it's not quite binding, but they've got a lot of brand and reputation to protect. It's rolled up into some of their marketing. So maybe solutions like Path Zero that help corporates understand their current emissions, help them know where to transact and help them get on a path to reaching zero, that does make short-term sense. If you compare that to an SME, for example, they are probably not facing the same commercial pressures around net zero. What they do face pressure around is their employees and customers and their morale and what they care about. So giving their employees the power to influence good decisions in their business can be really meaningful. And that's what Trace are doing here in Australia. The stakeholder, which we'll talk about a bit more, that on balance doesn't feel this pressure, but is really important in climate tech, is someone like a farmer who already works extreme hours, but really aren't facing commercial pressure to reach a target like net zero. So when you're a startup and you're trying to tell a story to an investor around the tailwinds for a solution, you need to really think about the stakeholder that you're selling to and whether a macro tailwind can really be pinned down to a direct immediate impact on a certain type of customer that will catalyze their adoption. And I think that's really, really important in climate tech.
I think that completely makes sense. It's sort of tying the incentive back down to something that will influence some level of outcome or influence some level of activity or whatever it may be. I think one of the things that I didn't necessarily realize before listening to your podcast were how nuanced the carbon markets actually are. I sort of took it as like, we're all trying to reduce emissions, carbon credits are a thing, blah, blah, blah. It's a very, very uninformed and naive take. And it was interesting to sort of see people approach it in different ways. You've got hardware solutions, you've got software solutions, you've got a hybrid mix of the two. And it's an interesting one where I guess investors are always faced with an opportunity cost problem. It's like, where do I spend the most amount of my time to get the most return? And so then when you're thinking about carbon markets and how investors should be thinking about them? What do you think the biggest opportunities are from an impact play, but also from a financial returns perspective?
So I would say this has gone on a bit of a journey. When I understood very little about carbon markets and was trying to get my head around it, the number one pressing problem for me was, what is the standard? What do you rely on? What validates something's price? How can you be sure that everyone is playing on the same field, particularly when it comes to generating and purchasing carbon credits and using this as a mechanism for marketing or meeting goals, policy or otherwise? The way that's evolved has been really interesting. So my first episode was with Alex Logan. What he's doing is providing that verification and workflow tool for people to validate carbon projects. One of the insights that he shared was that there is just a really small amount of new carbon credits being generated around the world. And so what I took from that was, okay, maybe this problem is less about making sure that we're all on the same wavelength around the world around what a carbon credit is. And maybe it's more about actual supply of projects or technology that reduces the amount of carbon in the atmosphere. And one of the following episodes was with Charlie McDonald and Hannah from Giant Leap. Charlie's frustration was that we're all focused on creating marketplaces for these credits to be traded. We're all focused on carbon accounting to measure emissions, that kind of thing. But we're not actually focusing on the core problem, which is excess carbon in the atmosphere. And so what that ultimately meant for me was the biggest value in the short term. There will absolutely be room for these marketplaces and that kind of thing, and verification mechanisms. They are very necessary. But before that, we need more software or hardware that is reducing the amount of emissions that are being released into the atmosphere every day. Now, I have very low confidence that humans will reduce their current consumption and use of technology. The quest for abundance is not slowing down. And so it's going to have to become more efficient, the way we do things. This, for me, feels like the most pressing and potent area for innovation in the short term.
I think that's really, really interesting. But it also sounds like you've sort of gone on your own learning journey through the series. Be really interesting to sort of understand what you've become less confident in, or whatever it may be. What sort of challenged your views that you previously held the most?
Yeah, so I think on the same trend of like validation and verification, what I have not been able to find a really compelling solution to is full supply chain traceability of a business's emissions. So there's a bit to define here. Basically, to properly reach net zero, for a business to hang its hat on achieving that, it needs to understand all the inputs and outputs in its business and the cost from an emissions perspective of delivering the units of whatever it is they sell. Now, it is fairly easy to understand who you directly transact with and what they do to deliver you a product and what you might do to deliver an end, call it a retailer of whatever it is you sell. Where it gets tricky is their supplier, or if you're quite early in the supply chain, the supplier after who you sold to. What I have not yet seen a compelling solution to, I know there are startups trying to solve it, is being able to get to that second and third degree commercial transaction in your supply chain. And the reason I am less confident about this is it is not so much a technology challenge, it is much more an incentives challenge. And so the innovation has to, I think, be quite focused on specific industries and understanding what the incentives are along those supply chains. It is very different in financial services to agricultural businesses, where the commercial risks at the start of the supply chain, so for instance, in the case of regrow, are on the farm, Regrow is a rare example. This is the startup founded by Anastasia, a rare example of how a tech startup has been able to start to get look through that looks like full supply chain visibility. The way they have done that is end purchases of agricultural commodities and products. So your businesses like Nestle, these agricultural export businesses, they have basically paid significant sums of money to measure commercial risks on the farm in their supply chain, and they have delivered the insights from this to farmers for free. Now, farmers are very busy, as we've discussed, but where there are things like there's information coming from a combination of satellite, weather, all these different data points that might be useful for a farmer in terms of how they fertilize their crops. This information fed to them in a way that delivers insights, that has proven to some degree to be a way that farmers will then go, okay, great, I will use this software, I will upload my information on my farm and the way I do my practices. It enriches the data and the insights I can get from this solution. Now, that is quite nuanced and has taken quite some time to build the technology that sufficiently incentivizes this upstream supplier to share their information. And I use that example because I don't necessarily think the relationship between a farmer and a business that sells food products is necessarily comparable to a durable manufacturing business and, a car sales business and that kind of supply chain. But hey, really keen to hear if people are finding other ways to get that data sharing. One thing I will say is I think that accounting platforms are just an inevitably important player here. And it'll be interesting to see whether it's these accounting platforms building their own solutions or whether it's platforms that partner with accounting platforms to get information that ultimately wins this quest for full supply chain transparency and visibility and understanding.
And it sort of highlights the uncertainty of some of the work that we do, I think, as investors, right? We can sort of sit here and postulate about all of these things, but realistically, founders are the ones who are sort of thinking through these incentive challenges or thinking through how you actually change a market's behavior or how you change a consumer's behavior to sort of adopt their products. When you're sort of thinking about what you've learned from the series so far, what are the, I guess, key traits that made these companies successful? Or what are some of the personality traits that sort of got the founders to where they are today?
I'll start with the company and then move to founders. Returning to what we discussed earlier around the financial return on a solution is the prevailing one. So, of all the companies that I interviewed and founders I interviewed, all of them have been able to raise some amount of capital. And I think it's because in the way they communicate to both their customers and investors, the return on paying for the solution is really clear. So GoTerra, it's cheaper than landfill. Orchestra, cheaper than relying on public energy markets. Cecil, it reduced the input costs of verifying a carbon credit. So therefore, people that want to do direct investment in carbon projects or people that want to sell this verification service have that cost reduced. For Loam Bio, this is probably the most compelling commercial return I've seen. It's early, but if it commercializes, it's quite amazing. So Loam Bio is essentially a liquid that you coat a seed in before you plant, and it spreads a fungus through soil, having the effect of when you harvest a crop, less carbon is released as a byproduct of that harvesting process. And so more soil carbon is trapped in the soils. That is a really clear way to reduce the amount of carbon that's being emitted to the atmosphere. The value prop for farmers is that they can just add to their top line revenue figure by producing carbon credits with no change to the way they conduct their farming. So no marginal cost or no extra work for an immediate revenue gain. So this common thread is really important. fundamental to any venture business, and it applies to climate. I think one thing that I've also discovered, which is perhaps distinguishable from other areas of technology, is just the importance of advocacy and storytelling. In a lot of instances, these people are experts in a field that is poorly understood, and in a lot of instances, they are creating a new market, or a market that is really in its infancy. And so they have to have an eye on the future, predict the future, and help people understand the path to getting their business towards that future. And so if we look through some of the guests that I've had on the podcast, they are true thought leaders and really inspirational people, whether it's Anastasia's thought leadership on Scope 3 emissions, whether it's Olympia speaking publicly, globally about the global food waste problem and the imperative, both commercial and social, to solve it. And Katherine McConnell from Bright, speaking at Parliament roundtables and really pushing the case for subsidising solar battery and renewable energy projects in Australia. This role is just an important part of being a climate tech founder. Founders have an enormous amount to manage, but the most successful ones are the ones that can educate almost as an embedded part of their business. The other thing that I would say, just as a sort of side note, which I'd love founders' perspective on what has worked here and what hasn't. Typically, VCs look for businesses that can access an end customer in a super, super, super efficient way. And typically, accessing that customer through intermediaries is prima facie slower. In the climate context, this can include consultants. The reason consultants are important in climate is climate for a lot of corporates is just seen as risk. And what corporates like to do with risk is pay someone else to bear the responsibility for it. The reason this is particularly notable for climate is corporates that might pay for a software solution or the end product of it. So risk mitigation, changes to their supply chain, projects that they can do to improve it. They want to be advised by consultants on this. So some of the success that we've seen from a traction perspective has actually been software sold to consultants that they pay for, and then they white label the insights, the tooling, and sell that on to their end customers. That is unusual for software as a go-to-market, but I have seen some success, particularly where the product is something like a reporting dashboard or analysis tool. The reason I say that is you only really report, a lot of businesses only really report on their emissions, call it once a quarter. And so the cadence of insight and actionable change that you can make from what you see on this information isn't there as an end customer. Unless you're really, really big and it takes 3 months to interpret it, it's not quite there. So consultants that might pay for this software and deliver a service to a whole lot of businesses at large, the SaaS model does work for them. And so that's a really interesting area where I'm seeing quite a different potential go-to-market for successful software companies compared to normal SaaS. The final thing is, as a founder, be really careful about blending climate metrics with commercial metrics. Absolutely, it can be embedded into a business model, but if you're trying to convince investors that they're going to make an extreme return on an investment, the number one thing is that the metrics and storytelling must be commercial. And I think that's just the fundamental thing that I've hammered home.
I think that's an important thing to sort of note for founders, because I guess when you're sort of working in an industry that is so impact focused or that requires so much advocacy, you can lose track of, I guess, like the bigger picture from a perspective of a financial investor, right? Like I think we all value and place heavy importance on the impact our portfolio companies have on the people that they serve, but it's also really, really important to make sure that there is a big vision, there is a big dream, and that there is ambition to do this at $1 billion scale rather than just at a $10 million scale. I did have one final question for you. You've already indicated that you're super interested in talking to other people, building in the space, new founders, future founders, existing founders. Where can they find you and how can they reach out to you?
Yeah, so Rampersand, we're spread across Australia and all social media platforms. So there's plenty of places to access us. Feel free to reach out on LinkedIn. My email address is hunter@rampersand.com. Abby's is abby@rampersand.com. We operate across Australia and New Zealand and support founders that have moved into other markets. We are Sydney and Melbourne based. Abby's Sydney, I'm Melbourne. So I'm sure we'll see you around at future startup and VC related events. Thanks, Abby, for coming on.
Yeah, super fun to be on the other side of the mic.